Hey everyone, Dave Keller here with Market Misbehavior. One of the key breadth indicators that we use to measure market participation just went from bearish to bullish this week. We'll share with you what that indicator is, how it's derived, and what it's telling us now about the market environment. Today it's about the Bullish Percent Index. So I've done some videos before that included the Bullish Percent Index. What I wanted to do today was briefly describe what that indicator is, how it's calculated, but focus on what the current indication, where it just went back above 50%, how that relates to previous bull market cycles when we've had a brief pullback. You'll see when it's worked and also when it hasn't. Before we get to those charts, if you like the sort of thinking about investor decision-making, behavior, sentiment, breadth, price, momentum, all those things, hope you'll subscribe to my channel. It'd be great to have you along this ride with us. Also, give the video a like if you appreciated it. We'd very much appreciate that back. Finally, put a comment below the video. What do you think between for the S&P 500 between now and year-end going into January? Let me know in the comments below. Let's get to the charts. All right, so now we're looking at the S&P 500's Bullish Percent Index. You can see this indicator actually ranges from 0 to 100%. It currently just went back above 50%. And above 50% basically means that over 50% of the S&P 500 members are showing a bullish point and figure chart. The rest of the S&P members are showing a bearish point and figure chart. You see, with point and figure charting, we'll look at one here in a moment, looking at an example of Apple. A point and figure chart is always, it's binary. It's either bullish or bearish because it's based on a series of columns that represent the trends. On this chart of Apple, a column of X's represents an uptrend, a column of O's represents a downtrend. And what you do every day is you can determine whether we're in an uptrend or a downtrend, then you check the highs and the lows for the day, and that allows you to update this chart over time. A buy signal is when a column of X's goes higher than a previous column of X's, like we just saw triggered today on Apple. We've had a couple of these going back over time. A sell signal is when a column of O's goes lower than the previous column of O's, and that indicates a new downward thrust. So any point and figure chart, the most recent signal is either a buy signal like it is with Apple, or a sell signal where a column of O's went lower than the previous column. What you do is you look at all 500 point and figure charts for the S&P members, and you turn that into an indicator called the Bullish Percent Index. We're looking at it on the S&P 500, although you can look at it on any index where you have members, an ETF, a particular sector, whatever it is. Now let's look at the times when the Bullish Percent Index has gone below 50. And that happened here recently, right at the end of November, right after the Thanksgiving holiday. And then it went back above there just again this week. So looking at when it went below 50%, I've highlighted in purple the 6 previous times where that's occurred. And you can see that every one of those times, it's been one of these really buyable dips since the March 2020 low. Well, as you might be able to see from the chart, I've also shaded this red area where, again, it looks a little different because the indicator went negative here in late February, didn't turn back positive until the end of March. It's been about 5 weeks below the 50% line. The problem is if you buy it right at the beginning of that, when it goes below 50%, you're getting in at a fairly decent level in each of these brief pullbacks, but you're really getting killed if you bought during that period. That's why I colored it a little bit differently. So overall, is it a good sign of an actionable, buyable pullback within a long-term uptrend? Absolutely. The danger is it turns into something deeper, more sinister. It continues further down, and then you have to rely on good risk management skills or techniques to make sure that you minimize your losses in that sort of scenario. Well, one of the great benefits of charting is we can look at a deeper history. So now I'm actually going back, I think about 7 years. Oh, sorry, a little further, 13 years. And I'm looking at this deeper history. That's right. I'm going back to the 2009 low. The idea is I wanted to look at this secular bull market phase from mid 2009 to where we're at now in 2021 and see how well have you fared if you bought every time this Bullish Percent Index went below 50. And I flipped these so the S&P 500 is at the top now, and the Bullish Percent Index is this line in green at the bottom. Well, I've highlighted all of these with either a green or a red shaded area, which coincides with where it is in the price. And you can see that all of these green examples, if you just ignored everything else and just bought when the Bullish Percent Index went below 50%, this is where you would have gotten in. You can also see 3 examples that are in red where buying at that point actually was a little challenging because you didn't buy very near the lows. The market actually continued lower, and that's happened only 3 times since the 2009 low. That was in 2016 in the first quarter, toward the end of 2018 when the market really accelerated to bottom out in December, and then in February to March of 2020 where we had that deeper pullback.
So overall, if you look, you've seen that this has happened about 20 times, about over the last 12 years or so, going back to the 2009 low. All but 3 of those times, it's been a very good opportunity to buy stocks. And so most recently, when we see that pullback and we see the bullish percent index skip below 50%, this sort of chart comes to mind where I realize that while there might be some times where we go a little more deep, a little worse, we fare a little worse in the short term. Over the long term, the trend has remained very positive, and I'm betting on the averages if I look at this as a potential buying opportunity when we dip below that 50% line.
So there we go. That is an update on the Bullish Percent Index. It recently dipped below 50%, then went right back above. And if you look at the last 12 years or so, going back to the 2009 market low, overall, dipping below 50% on the Bullish Percent Index has actually been a fairly profitable strategy. There were 3 instances where we went a lot lower, and I would encourage you to think about downside protection, risk management. If you do this sort of strategy where you're buying short-term weakness, be prepared that the trend continues lower. As one of my mentors said, all large losses begin as small losses. For Market Misbehavior, I'm Dave Keller. If you like this sort of thinking about investor decision making using charts and technical analysis, I hope you'll subscribe to my channel. Also, give the video a thumbs up if you appreciated it. We very much appreciate that back. Finally, put a comment below. Do you agree with my assessment of the S&P 500 using the Bullish Percent Index? Let me know in the comments below. Take care.